Hey, my name is Connor, and welcome to Crypto Empire, where we dominate the crypto market. In this video, we'll be taking a look at a few factors that do affect the crypto market, as well as the entire global markets, mainly inflation. Because as long as inflation remains high, we will remain in a risk-off environment that is not conducive to see prices increase in the cryptocurrency markets. So we'll be taking a look at where inflation is right now, what the Fed is doing to combat inflation, and what it means for the Bitcoin and cryptocurrency prices. If that does interest you, be sure to stick with me until the end. Also, if you're new to Crypto Empire and you're not already subscribed, go ahead right now and smash that subscribe button down below and turn on all the notifications so you don't miss any future videos. Let's get into it and let the gains be with you. To start off this video, let's take a look at the overall cryptocurrency market cap. At the moment, the overall market cap is $1.29 trillion, with Bitcoin trading at $29,867 and ETH trading just above $1,800. So it's widely understood at the moment that the Fed is in a period of contraction. They are tightening the economy because it grew too much over the previous few years because of things such as quantitative easing, i.e. printing a ton of money. So they are right now trying to shrink the economy by raising interest rates and just tightening the money supply overall. And this goes ahead and it strengthens the US dollar. All right, and as we know, the US dollar is inversely correlated to Bitcoin. So when the dollar goes up, Bitcoin goes down, and when the dollar goes down, Bitcoin goes up. And taking a look at the US dollar index, we can go ahead and see that price was actually rejected at this multi-year resistance level just above 105, and it has went back and tested the top of this channel that goes back to December of 2020, which was of course the spark of that very exciting bull run that we did just get to participate in. So we're going to go ahead and see right now if we can get a sustained bounce back above resistance on the US dollar index, which could then possibly go ahead and cause a double top to see price reform back into this channel and maybe even drop lower and break the channel from there. But in order for the dollar to weaken, we need to see the Federal Reserve reverse its current course of action, which means that they go ahead and start printing money again, as well as lowering interest rates, and this would cause the dollar to, of course, drop like I just said. So until the Fed changes its current course of action, we won't see that happen. You're probably wondering, when will the Fed switch up and start quantitative easing again, printing money and lowering interest rates so that we can see the dollar weaken and see risk-on assets like Bitcoin, crypto, tech stocks, etc. start to pump again? Well, this article from Zero Hedge gives us some insight into when that may be happening, right? So how quantitative tightening ends. We can go ahead and read here in this article about the current state of the Fed and what they are trying to accomplish by raising rates and tightening the economy. So right now we are at the beginning of June. May 2022 did just end. So by the end of May of 2022, the Fed's balance sheet was over $8.9 trillion and consumer price inflation was at a 40-year high. So the master plan for the Fed right now is to reduce its holding of treasury notes and mortgage-backed securities by a combined $47.5 billion per month for the first 3 months. Then by September of 2022, the total amount to be reduced will go up to $95 billion per month. So according to the Wells Fargo Investment Institute calculation, the Fed's balance sheet could shrink by almost $1.5 trillion by the end of 2023, taking it down to a total of $7.5 trillion. However, what is the odds that that actually does happen? Actually very slim, because the Fed can reverse its course and switch up at any moment. They said they want to do this, but they can change at the drop of a dime. So we can go ahead and read further right now. Fed normalization policies are doomed to fail. To put things in perspective, it took 24 months for the Fed to reduce its balance sheet by $800 billion between October of 2017 and September of 2019, and this was after they expanded by $3.5 trillion. So they grew it by $3.5 trillion, and then they managed to get it down by $800 billion in a period of about 2 years. And we can go ahead and see here that this quantitative tightening program was abruptly ended in repo madness. So now the Fed plans to extinguish nearly double the assets in a lower amount of time in 19 months. It doesn't seem like it's likely to work out. They probably will switch up. But first, before they do go ahead and reverse their current course of action, we will see interest rates continue to rise. Rate hikes are expected to increase by 50 basis points, and then eventually drop down to 25 basis points. And we're also going to see asset prices like bonds, stocks, crypto, real estate fall, right? Because the dollar will continue to strengthen, which is bearish for risk on assets like bond stocks, and of course crypto as well. It trades like a tech stock nowadays. So long story short, it is not over just yet, but eventually the Fed will abruptly reverse their current course of action and systematically, of course, print more money, which pretty much robs us of our labor. I'm not going to get into that too much in this video. I encourage you to educate yourself on the effects of printing money and what it means for you and what it means for the time you spend working to make money. Basically, it goes ahead and it cancels it all out. It debases the currency. So now that we have a better idea on what the Fed is doing right now and when they may possibly reverse their current course of action, maybe 6 to 12 months, we'll see about that. We can go ahead and take a look at the market calendar to see what upcoming events could affect the market, and mainly that is the CPI coming in on Friday of this upcoming week, June 10th. So we want to see CPI decrease. If CPI decreases, that is bullish for Bitcoin, meaning inflation is coming down. If CPI increases, that is very bearish for Bitcoin because inflation will continue to rise, meaning that the Fed will have to keep on increasing rates, tightening the economy, which causes the dollar to continue to rise, which is bearish for Bitcoin, crypto, and all risk on assets. Now, with all of this being said, it's time to hop into the Bitcoin chart and go over what this means for the bottom, because it's very important to not go in too early. Of course, if you're taking the dollar cost average approach, that means you just continue to buy the same amount at a specified point in time, whether that be every week, every 2 weeks, every month, etc. That's the dollar cost average approach. But if you are looking to see when the bottom will be, we can go ahead and take a look at the Bitcoin chart, and the 200-week moving average has been a very reliable indicator on when the bottom may possibly come into play. Going all the way back to 2015 over here in that bear market that did occur back in 2015, you can see that the 200-week moving average did serve as a very nice indicator on when the bottom was actually in. If you went ahead and bought anywhere around the 200-week moving average, you pretty much caught the bottom. And then again over here in 2018, as well as the retest in 2019, same 200-week moving average coming back into play, marking the bottom perfectly in 2018. Now in March of 2020, when we had the huge market crash, price came right back to this 200-week moving average, and it did wick below it, but it quickly recovered, and then we went on that monumental bull run that we did just experience in 2020 and 2021. Now, current day, the Bitcoin price is hovering just above the 200-week moving average, but it has not tested it just yet. And you can see I also do have a demand level outline over here at the previous all-time high from 2017, just below $20,000. All right, so this level is definitely where I have my eyes on the charts, and we might see a scenario that did occur over here in March of 2020 when we see a wick through and then a quick recover. That would make sense because this 200-week moving average right now is sitting at about $22,200. All right, so if it came down to 22K, we could see a wick down into this pocket of liquidity that I have outlined, this rally-based rally demand level, as well as, of course, the previous all-time high from 2017. It would make sense to see a wick down into the level. Also, an added confluence, we can go ahead and pull the Fibonacci retracement tool from the all-time high of 69K down to the March 2020 low at around $3,900. And the 78.6 Fibonacci retracement is right in the middle of the demand zone, coming into play just below $18,000. So this level from around 18K up to 22K is what I have my eyes on. There's no guarantee that we will get there, but if the Fed continues to tighten, to raise rates, we will most likely see another flush out in the market, and that could potentially mark the bottom. So I am eager, I am waiting right now. If we do get a test of this 200-week moving average into this pocket of liquidity, this demand zone, in my opinion, not financial advice, that is the time to go ahead, back up the truck, the fiat truck, and to go in heavy and put that money to work. All right, now let's go ahead and take a look at the short-term Bitcoin price action for all of the traders out there. So taking a look on the 4-hour chart, it has been very, very, very choppy for the past 3.5, almost 4 weeks now. We did get this rally over here as high as $32,400, but there was no buying, there was no sustained demand. The bulls could not hold any support levels, so price came right back down to support here, $29,420. Now we have just been going sideways all weekend long. It is looking pretty weak, and volume is super low right now because it is the weekend. Now, if we cannot hold support over here at 29K, we most likely will be flushing out and coming down to go ahead and fill this wick. There is a saying in the market, right? Wicks like to get filled. And this wick down here from around $27,500 down to that low at around $25,200 has not been filled yet. So that's still a very large possibility to see this wick filled. As well as I said, we can go lower and test these levels over here on the macro chart. But here in the short term, if we cannot hold this current support level just above 29K, we most likely will be going to fill the wick down here. Now to the upside, like I have been repeating over the past few weeks, I do think Bitcoin has the potential to go ahead and test some higher levels, mainly from about 35K up to around $37,500. I don't think it does get to 37K, but if it does, that would probably be an ideal shorting opportunity, as you can see from the heavy resistance in the chart over here at around 37K. But over here at around $35,000 also does serve as very big resistance. But there's also some supply levels that I have outlined in the chart right here, going from around 32K up to as high as $33,400. These are areas where I am actively looking for shorts. Right now, we have to see how the weekly candle does close. I'm not expecting any volatility until we see the markets open, the stock market open on Monday. Maybe we'll get some action tomorrow night towards the weekly candle close. But here in the very short term, if we don't hold current support, we most likely will come down and fill the wicks. If we can actually see some momentum to the upside and make a higher high past this current local high at around 32,400, we do have a lot of supply just above. Right, this was my main area actually that I was looking for shorts, but price never made it up because this bounce was so weak. Right, this was such a weak bounce in the market. Price never made it up to the higher supply level. It did get rejected at the first one, but if we can actually make a higher high here past this current local high, I'm looking for shorts in these areas. So in this video, we took a look at what the Fed is doing to combat inflation and what that means for the Bitcoin price. I hope that you did enjoy the video. If you did, make sure you let me know by leaving a like down below. Also, if you're new to Crypto Empire, you're not already subscribed, go ahead right now and smash that subscribe button down below and turn on all the notifications so that you don't miss any future videos. Also, if you have any questions or comments, leave them in the comments section down below. My name is Connor from Crypto Empire, and I will see you in the next video.